Good morning, everybody. We're going to get started. See everybody popping on. I would like to introduce you to industry expert Christine Beckwith, who is also my personal coach, mortgage, business, everything related to make Karina Carter better. So she's been a huge part of our CMS success for the past 3 years. Also, Kristen's in the program too, master coach. We've got Michelle in 2020 Vision for Success. Holly, Joanna's been in. So we've got several people who have visited and are still coaching in 2020 Vision for Success coaching. I work with Christine monthly on how we can make things better for our company, to how I can make things better for you guys and myself. So without further ado, Christine's going to give us industry update of where we think we are 2023, what she's been seeing with other companies, and how she is advising definitely the boardrooms and the CEOs nationally. So thank you so much for joining us, Christine. We're on about a 20-minute timeline with her. I thank you for taking time out of your day. So I'm going to let you have the floor.
Awesome. Well, thank you guys so much. I'm not familiar with Google. And I've got a PowerPoint open right now, but I've got to close like 9,000 windows as I just realized the way that they do their screen share. So we'll see if I can get to that, or I'm just going to be speaking off the top of me watching. Let me see if I can do this.
You can do the present now, and it'll just show the one screen and the one tab you have open.
Okay, so that's what I'm going to attempt to do this. We're going to see if I can or not. All right, hold on. Present now. A window. Got it. There we go.
Christine is a little skittish on this because of we have been going over in 2020 on, actually, we've been very fortunate, knock on wood, but we have had some issues with Zooms getting hacked and different things. So why I say that is, like, I have learned yesterday, I was a little nervous on one of ours. I was like, where are these people at? And I look and see, like, can I kick some people out? Because I mean, it does come up and people are going through the Zoom. So I'm going to let her go through her PowerPoint. So
yeah, it's so true. It's when I leave, so I don't blush, you can tell them what happened to us last month. But can everybody see the screen and hear me?
Yes, we can.
All right. So we're going to go fast. This is really going to be like 15 minutes, but you do want to have your notes out and your pens. The presentation you're getting right now, I had the honor of opening the 2023 MBA IMB whole community kickoff of education on this exact PowerPoint that was designed for them. The IMB is made up of the biggest CEOs of banks, lenders, and brokerages in the country. 250 of the CEOs of the biggest banks, the president of Wells, the presidents of Bank of America, and everybody underneath, the Madish, Bia, like all those people. And I get to be the educator for the opening this year on the topic of what is going to move the needle in 2023 with the sales force, and where are we going to get things wrong? Where are we going to get it right? And so this is what this PowerPoint is. I start with, the quality of your thinking determines the quality of your life. Anyone that spends any time with me knows that here at 2020, when I built this coaching firm, after having done all my competitors' entire coaching programs over the span of 20 years, all of the great ones, I discovered that one of the missing ingredients was emotional intelligence, stress management, grief management, health and wellness, and all these areas that are like kind of us putting our oxygen mask on, if you will. And it's so important, right? And a lot of companies and professionals, they relegate that to kind of the cheerleading fluff part of coaching. And I'm going to tell you, that is the core. The core of what is going to make you successful is going to come from you being really able to manage your health and your mindset. And I'm going to tell you, when those two things are not calibrated, it is hard to teach sales tasks. It's hard to manage a tactical business plan. It's hard to withstand the stress of this business. It's hard to work with focus and clarity without ADHD. It's hard to control your OCD. It's hard to stay calibrated in a seat where your seatbelt is on and you're strapped in for success unless you do these things. So here at 2020, we teach all of that. We're not teaching that today, but I want you to be mindful that the time you spend in the morning hours getting yourself ready for cruising altitude before you sit down at your desk, all those things, positive affirmations, positive reading, exercising, a good breakfast, like all those things, even, praying, religious stuff, all those things lend to mindset. So with that in mind, now I'm going to get into the tactical parts. It's a 1-3 punch. We're going to go fast, like I said. Number one, in 2023, you must know your economics. So I'm going to start from there and tell you that, whenever we got into the mortgage industry, girlfriend, guy friend, whoever it was, family member, somebody said, hey, come over here. The water's great. You can make a great career over here. You can make a great living. And so you did. That's who we have to blame for being here, by the way. So whoever that person is, you might want to thank them today and say, this has been great or terrible, whatever it's been. But we got here, and a lot of times we didn't get sat down in a seat that taught us how to be mortgage loan originators and mortgage professionals in any facet of a job that we do, whether it's underwriting, processing, LOA work, whatever it is, even leadership and management. We didn't get the right economic lessons. We didn't get told like, hey, you're going to get paid like a doctor or a lawyer. And so you need to know how to be a surgeon of mathematics. You need to understand global and industry economics. Why? Because these are the ignorant things that you're going to run into by people that are inept at getting our product. What does this mean? I'm going to break it down, and we're going to get serious about economics for a minute. So here at 2020, we are constantly teaching economics. As a matter of fact, in our weekly sales meeting at 11:30 on Tuesdays, we have an economic update that talks about the interest rate and what's happening. Now, there's a lot of confusion around economics. First of all, if you turn on the nightly news, the big news stations, you're going to get a global economics update. That is typically tied to the S&P 500 or Bloomberg and not tied to your mortgage industry economics. Why it's important, again, is you're going to come across consumers that are going to tell you why they don't want to refi this year and why they don't want to sell their home this year. And if you can't help them get to a comfortable place and convince them that doing both of those things is really smart this year, then you're not going to make sales. And I'm going to tell you, standing in front of 250 of the top presidents of banks this year, your sales force is going to get it wrong this year. And I'm going to tell you why. They're going to get it wrong. Some of you are going to get this wrong because you have been living in a market for 3 years where your whole job had moved. If you've been here for longer than 3 years and you were here before this last refi boom, you were sitting in a seat where you weren't order taking. There was a time in the past 20 years where you were truly a mortgage expert. What does a mortgage expert look like? It looks like a person that understands economics. So let me explain this. We hear all the grandparents of the mortgage industry, I'm one of them, give our, I walked uphill both ways in the snow barefoot stories from 07 and 08, right? Shake your head if you've heard these stories. And it's like a rite of passage, but we need to sit with that. We need to understand it. I want you to understand in 07 and 08 and in 22 and 23, there are similarities, but they are not the same market. And this is the mistake we're making as loan originators. We have consumers who are worried about taking equity out of their home because they're worried that the equity is going to fall out and we're in some sort of bubble. And it's reminding them of 07 and 08 when they owned past homes or they got caught upside down. By the way, I owned houses that were upside down in 07, 08 because it wasn't anything to do with me. It wasn't anything to do with any American. It wasn't about spending. That was just the bottom of the value within our industry and our product falling out. And how did we get there in 07 and 08? Very different than how we got here in 22, 23. And this is where you need to pay really close attention. Let's first talk about the similarities of those two markets. Number one, volume is down. You're doing less loans. The mortgage industry is doing less loans. And I'm talking about industry economics right now, not global economics. Also, the interest rate went up. So those are the similarities of those two markets. That is it. We're doing less business at a higher price. Okay. So that's like saying we had the flu back then and we have the flu right now. And we had the sniffles back then and a headache, and we have the sniffles and a headache right now. Now, here's the underlying huge difference. That market in 07 and 08 was fatal. It was like the beginning of COVID-19 when we were going to die from the cold and the flu, but real. And so what was happening back then, and here's the underlying symptoms of that market, is there was low demand. People were not buying homes, and more homes were for sale than we could move on the market. So everything was sitting for long periods of time. And demand drives price. When we first come out with flat screen TVs, they were $2,000 to get like a 60-inch, right? But as everybody wanted them, the price, went to a place where it became commoditized. There's a leveling out. So all of these things kind of like rise, and demand will fluctuate the price. What was happening then is nobody wanted to buy it. And so what happens if you aren't able to sell your apples for 10 cents each like you have been? Well, suddenly you got all these apples. Now you're selling them for $1. And it should be the opposite. You should be selling them for a penny because you need to get rid of them. And by the way, you're going to walk into 2 apple orchards and have 2 types of owners. The one that gets that this apple is no longer worth 10 cents and I got to sell it for a penny. And the guy that says, I need to make my mortgage payment and I have this apple orchard and nobody's buying it for 10 cents. So now I'm going to sell it for $1 so that I can make my mortgage payment. Somewhere in the middle of this mortgage industry, we're caught up in this demand and rise and fall. So back in 07, 08, there was no demand. There was high delinquency occurring. We were doing 228 loans, no income, no asset. We discovered the hard way that if you give a loan to somebody that you haven't verified their income or their assets, it could default. And the default ratios went to 42%. It was insanity. So investors that were investing money were not getting their money back. You were seeing people that had never been late on their mortgage ever in the history give up vacation homes, second homes, and investment because their houses were upside down and the money was stuck. They couldn't refi and they couldn't sell. So everything came to a screeching halt. We are not in that market, people. We are in a robust market. We were on our hands and knees back then saying, dear God, please put equity in homes. And today we have tons of equity in homes. We have the magic answer to all of our problems, which is we have cash equity in our properties. The difference is we've been spoiled for 3 years on low rates. So here's the homeowner with the low interest rate, and they're feeling really foolish in 23 to call you and ask you to raise their interest rate because they've been taught by grandpa to never do that. So the conversation this year in 23 has to change economically. We have to educate. We got to get back to being mortgage experts. And we've got to say, this is a great time to consolidate all your debt. Because here's another real fact that you need to know. We are at the highest consumer credit debt that we've been at in 15 years right now. So now let's take a bigger look from 50,000 feet. For a minute, I want you to forget about all the leads you have in your pipeline right now where you're not selling well on price and you think you're stuck. You're the kid that's standing in the river whose feet isn't touching the ground and the water's flowing fast by you and you think you're drowning. I'm here to tell you, stand up. Stand up. You are not below the water line. You are going to survive. This is not a tsunami. We are going to be okay. But we have to get our heads to a place where we know the economics. People are coming and saying, I'm not going to do this because I don't want to end up upside down. Why are they saying that? Because they ended up upside down in 07, 08. And that headache and sniffle they got from this market that feels like that market is making them stop like deer in the headlights, panic, because people died back then. Of course they're scared. We're here to say, no, Mr. Smith, let's talk about this. Let's look at your mortgage and let's take a look. So that's number one. Number two is your ability to overcome the price. So now you've got people coming to you and they're saying, well, Wells is giving it to me at this price. Or they're saying, hey, I got 2.5%. Can you beat that? We already know all day long. Our answers are no, I can't. And that's a better rate than I've got. And I'm going to tell you, even with brokers being able to do better rate than lenders, even having that advantage, nobody in America, 99.9% of the people here in America giving loans today do not have the best price. One guy, one company in this whole US has the best interest rate. I do not know who it is. It was never me. I was in the industry 32 years. I always worked for companies that were 0.75% interest rate out of market. And I sold the shit out of every single year that I was in there because I didn't get stuck on what I knew. And this is what I know. price is a seesaw. Okay, the interest rate sits on one side and the fees sit on the other side. In 07 and 08, the regulators came in and said nobody in this industry is going to benefit off profiting from gouging the client ever again. And you can't raise the interest rate. It's going to be risk-based. So all lenders have a risk-based way that you price out. Obviously, LTV, debt to income ratio, all of the financial facets considered. You are the deliverer and the inspector of these financial risks on behalf of the lender. So what you got to do is educate this year on pricing. You got to say, Mr. Smith, let me tell you something. I can't make money off your interest rate, okay? In 07 and 08, they changed the LO regulations on compensation. All I can do is quote you a rate. I understand you're sitting there and you're saying you have a better rate from Wells right now. I want to talk to you about that interest rate. I got to ask you some questions because here's the deal, Mr. Smith. If you got a rate that's lower than my rate, then he hasn't done a full job because our rate should match. I'm going to ask you a thorough examination of your pre-qualification today, okay? I'm going to ask you everything there is. I'm going to pull a triple merge credit report. I'm going to run you through an automated system. I want you to send me your pay stubs, your bank statements, your W-2s, your 1040s. I'm going to look at everything, and I'm going to quote you a rate that is factual, okay? That's what I'm going to do. And if it's higher than the rate that you're holding, I'm going to guess that my competitor didn't check all the boxes in the assessment. And here's what's going to happen, Mr. Smith, and I'm really worried about this, is that you're going to go ahead with that lower rate quote you got right now, that verbal rate quote, which, by the way, I can quote that too. What'd you say you got? 2.5%? Well, you know what? I can give you 2.5%. I can say that. I can say it all day long. And then what we're going to do is get you locked in. We'll get your application in. And then when we go to lock you in, and I really look at all the numbers because I got to have that all in before I can lock you in, I'm going to raise your interest rate at that point to what it really is. Because trust me when I tell you, that's what's going to happen to you with that other company that you're holding that low interest rate quote on. I'm going to do this today so we start from a trusting place. Because here's the thing, Mr. Smith, if he can do better than I can or she can do better than I can, that means there's some embedded fees. And if there's inflated fees which you're financing, then you're compounding that low interest rate into tens of thousands of dollars that you're financing. So the long-term play return of your payments on your mortgage is going to have you putting more dollars out over a longer period of time. And you're doing this all because you're buying that discounted verbal rate that, by the way, is costing you a lot of money. So if you don't want that to happen, then today I'm going to talk to you about what your real interest rate is, what you qualify for, what your true rate should be at any lender. And you can go to the other guy. You can go over there. You can pay the higher fees. You can pay back tens of thousands of dollars more in interest because you finance a higher amount. But you also have to consider, did you get the most loan while you were at the table? Because a lot of times with those low interest rates, you're capped out at what you can take. A lot of times there's rules. You can't pay everything off. A lot of times you don't qualify when you really get under the hood because your debt to income ratio is higher than that low rate product will allow you to be. So I want to get you into the maximized financing, meaning the most impact. I want to look at all of your debt. I want to look at what you're actually paying out. And I'm going to show you how much savings you can have on a rate that you can rely on, because I'm going to take you from the quote to the lock and promise you that rate and get you that rate. But hear me, if you say this, you've got to do that. All right. Final number 3 thing, your digital sales strategy. I am watching marketing right now, and I am very much a snob when it comes to marketing. I own my own company, Vision Mark. I am not somebody trying to market well. I am somebody that built marketing for H&R Block Mortgage, and I built the biz dev team, and I built the training center. I did it again for AnnieMac for 12 years, and I did it for the last 5 for 2020 Vision. And so when I say this, your social media is your TV stations. And I'm going to stop sharing as I say these final remarks about this and see if I can pull your screen back up to where you are. All right. And I'm going to say this to you. Your social media is your TV station. Okay. How well and believable you are at fishing this year for this business. And this is what I was saying to the leaders. People aren't convinced in the loan officer seat about this market because they've just been looking at a rate sheet for 3 years going, I can beat that. I can do your loan. I can beat that. I'll do your loan. Give me your docs. I can beat that rate. I can do your loan. We've been order takering all day long. The phone's not ringing as much this year. It's starting to, but it hasn't been. We're afraid to start that conversation because we lack the knowledge and confidence to understand that this market is rich. It's rich. And so we've got to be believable on our TV stations, on our social media. You have to start marketing from a place where you come out as the mortgage expert that I want you to be and say, if you are sitting on a low interest rate right now and also high interest credit card debt or loan debt, please call me so I can show you what you can do with your home's equity. You could save hundreds, maybe thousands of dollars, and we'll get you that lower mortgage interest rate in the future again. I will get you the rock bottom, best qualifying interest rate that you can get while saving you this money. Do not sit on that low mortgage interest rate if it is not helping you leverage your wealth. What does wealth look like? And you can cut this up into all kinds of ads. Let's talk about wealth. What are the wealthiest people in the world doing? The wealthiest people in the world are refinancing right now and grabbing all that equity they have. They are not sitting around like deer in the headlights on top of that 2% interest rate like they're laying the golden egg. They're moving stuff around right now using that equity and still very good interest rates to leverage liquidity and lower debt. How much are you waving that sign? And here's the final thing that I'm going to say, and I'm going to stop here. Purchase business. Of course, during the low times, we should be doing what Karina is doing, and that is fortifying your foundation. What do pro athletes do in the off season? What do you think Tom Brady's doing right now, besides maybe dating Reese Witherspoon? We don't know. He is in the gym making muscles for himself because he is in the off season. He's getting stronger. What is CMS doing right now? What is 2020 doing right now? We are getting ready for the wind to get back in our sails. We know there's going to be a future market where that wind starts blowing. We want our ship to be repaired from the last tsunami we just went through. We're sewing our sails. We're getting ready. We're exercising. We're polishing the deck. We're getting ready to sail the 7 seas. And so that's what you should be doing with your business too. How do you do that in the purchase real estate arena? Well, you get out there, you meet more realtors, you go deeper with the realtors that you are, you bring value, you bring education, you find formidable ways to do things. But guys, let's get smart. You need to start putting out in your marketing, who are all the people out there that want to sell their homes? Now you might ask me why. I'm going to tell you that you're letting gold pass through your fingers right now. If you have people that call you or say, do you know a realtor? And you say to Susie Q realtor, hey, here's a deal this person wants to buy. I'm going to tell you, you're leaving that sale to be sold by the realtor, which is not the best sales guy in this equation. I am, you are. What you need to do is you got to make a pit stop at your desk with anyone wanting to sell their home this year, and you need to convince them as a third party why that is so smart, because they're going to be able to demand top dollar, and that market could change in the future. So you're going to create a sense of urgency. You're going to warm that thing up. You want to be loud about it on your marketing because all your realtors are watching you. And if they see that Karina is fishing for people to sell their homes and they got an inventory problem and they're sitting at a table right now while you've been bringing first-time home buyer pre-quals over to them, and they're like, hell no, I got no bread to feed. We got more mouths at the table right now than we can feed. You're bringing me extra people right now with more hungry mouths. I don't need that. I need houses. Well, you got to bring the bread to the table. How are you bringing the bread to the table? You're going to bring the bread to the table because you're going to start putting your megaphone out for what they need, what your realtors need, which is sales. Because people are sitting in their homes from COVID because it's their bunkers, it's their shelters. I don't think they're scared to come out, but I think we've gotten really comfortable, okay? The other day, I changed out of my yoga pants at 5 p.m. into another pair of yoga pants because in my head, I was changing to relax. That's how we're conditioned, okay? I mean, I was like, shit, I just went from one pair of yoga pants to another. In my mind, I'm like, because I'm conditioned for years, it's the end of the day, let's get comfortable. And we don't even realize how comfortable we are. We got to get uncomfortable this year. So I'm going to end by saying this: be smart, be strategic, but most of all, be believable and be educated. This is a market we dreamed of for 2 decades, and we're standing around here licking our wounds from a market that dried up a year ago. There's people miles ahead of you right now. Your competition, some of them, understands what I'm saying right now, and they're a mile or two down the road in front of you. Where are you at on this journey of believability and selling what we do? If you are listening to me today, right now, and you think, shit, I ain't been doing none of this, well, then you're welcome, because you are going to get off this call and you're going to start doing these things, and you're going to raise the flag, and you're going to raise the conversation, and you're going to find people that need your mortgage expertise. That is my word for today. Yay.
Thank you so much, Christine. I know your time is valuable, but woo, everybody is just like,
All right.
yeah.
Yay.
We're
I
gonna-
love CMS. I'm just letting you know. I'll be out there cheering you on. Tag me in your post if you go to market, and I'll give it some love.
All right. Thank you.